Good morning, ladies and gentlemen. Welcome to this special edition on Business Today Television. This time we'll be focusing on Patanjali Foods Limited. Mr. Sanjiv Asthana, CEO of Patanjali Foods, is with us. This is related to a transaction that Patanjali Foods has done with Patanjali Ayurved to purchase its hair care, skin and dental portfolio for a value of about 1100 crore rupees. Good morning, Mr. Asthana, and good morning, Sakshi. Very warm welcome to both of you. Mr. Asthana, coming to you first. What does this acquisition mean for Patanjali Foods in terms of extending its brand presence into hair care, skin and dental?
No, so currently we don't, for clarity purposes, we don't have existing portfolio of dental, hair or home sort of products. This is a big addition to the portfolio that we have. It was one of the stated intents which the company strategically had announced that we will be consolidating the FMCG portfolio. We are going to sort of make the company one of the very major companies on the FMCG side. So I think this is a major step in that direction, where we are acquiring the non-foods portfolio of Patanjali Ayurved now. So that will complete the, all that the parent company has, other than the medicines and other business, a lot of other activities that they have. But I think for the listed entity, this will complete a process. And I think this allows us to now build up a growth momentum at a different level altogether, with a lot of synergies that are going to kick in now.
Right. Dr. Asthana, also wanted to understand the broad contours of the deal, if you could expound upon that. What will be the deal timeline? You're saying 1100 crore rupees you're going to be paying. So how is that going to be funded? Over what kind of a time frame will this be also executed, if you could share with us?
So immediately after the boards have approved, which was yesterday, we're going to go for the shareholders approval, which typically should take less than a month. Similarly, we're going to, in parallel, make application for the regulatory approvals as well. And we believe that in terms of the approvals, etc., if they're done within a month's time, or maybe 6 weeks at max, I think by middle of August, we should be able to close the transaction and consummate the deal.
Okay, 2 months from now, you will be adding Patanjali Ayurved's hair, dental as well as skincare portfolio to Patanjali Foods. Mr. Asthana, what will be the addition to the top line? You are paying 1100 crores, but what are you getting in return? How much of top line will be added in Patanjali Foods? And if you can also drill down the impact on EBITDA as also profit after tax for Patanjali Foods with regard to this acquisition?
So what we are getting sort of from Patanjali Ayurved with this acquisition is last year their revenues, what they earned in these businesses was 2,771 crores. What we're getting is close to 500 crores of EBITDA. What we're getting is the entire workforce that is engaged in this particular business, right from management downwards. What we get is the entire distribution network which is coming to us, as well as all the licenses, brands, patents, and anything that Patanjali Ayurved possesses that comes as part of the transaction. The second part of your question was that how we are going to fund it. The cost of transaction is 1100 crores, and which is going to be entirely funded from our internal resources. We have very strong balance sheet. We have got zero debt there. We've got enough cash reserves in our business. So our ability to fund the transaction would not require any fresh round of fundraise or anything. And we are pretty confident, excuse me, that we will be able to entirely fund it, from our own resources. And it is a very attractive transaction, from the listed entities perspective, as well as from the shareholders. The terms at which we are getting and, the opportunity to consolidate and grow this business, both at the levels of top line and expanding the margin, are enormous.
Right. So, as far as margins are concerned, I wanted to really ask you, give us a sense of what kind of levers are available with you. What could be the margin expansion that you can really do with this acquisition, because you are going to be adding some high margin products to your existing portfolio now from the non-food business of Patanjali Ayurved.
So we're pretty confident that, look, the current EBITDA margin is about 18% in the business. We are confident and we're targeting that we will sort of add 200 basis points to this portfolio over the next 18 months. And it will be driven around three core areas. One is at the market and distribution level. We believe that a lot of efficiencies can be sort of extracted. Second is at a supply chain level, we believe in terms of our, the procurement system that we have, the distribution system that we are adding, as well as at the supply chain levels overall on the manufacturing side, we will add value. And third is that the overall consolidation of the FMCG portfolio itself will bring in other synergies, and overall the target is that 2% we should add to the margin over the next 18 months. And the teams will systematically start getting into action now. And there's a great deal of sort of overall orientation is that this should be highly achievable.
Right. Mr. Asthana, did I hear this right? You've paid 1100 crore rupees to a business which gives you a 500 crore uptick on EBITDA, and the revenue uptick will be 2,771 crores.
You absolutely heard it. Yeah, you absolutely heard it right. And it's on a slump sale basis where, everything within 1100 crores is just basically land, plant and machinery, building, as well as the inventory. So this is everything is at actual cost. And the transaction, the way it is being done is on a slump sale basis. So this is extremely positive and EBITDA accretive event that's happening for the listed entity. And it should be very positive in the long run from the overall on the company's both fortunes in terms of growth as well as profitability.
Okay.
Mr. Asthana, I would happily buy this business if you can get something which is throwing up an EBITDA for 500 crore rupees, for which you pay 1100 crore rupees only. How have Patanjali Ayurved shareholders agreed to this? It's definitely in favor for Patanjali Foods, but it's extremely negative for Patanjali Ayurved.
So you have to go back to our history. There were two acquisitions that we've done before. We acquired nearly 1,000 crore plus business of biscuits for 62 crores. With that business in 3 years, 2.5 years time has become 1,600 crores last year. We acquired the entire foods portfolio, which had some of the most marquee brands like Chyawanprash and Honey, etc., for 690 crores, which was 4,000 crore business. So while it may appear very exceptional and out of turn, but I think the past track record has shown that the promoters of Patanjali Ayurved have been, very with a much broader vision, very pro shareholders, very pro investor approach, what they've taken. And in generally, as a target for the consolidation that we're working towards, they've shown this, I can use the word generosity or a broad thought process that ultimately we need to build up businesses. Ultimately, we need to house the businesses in entities which are able to scale up and, grow them. And it's in line with that. So it's nothing which is exceptional really that you're seeing right now. It's been our track record, and I think in terms of the orientation of Patanjali Ayurved shareholders, I think that commitment to add value to the listed entity, I think is very steadfast, and it will continue to be there.
Okay. So also, if you compare with your previous acquisitions, which you are indicating right now, the way you have managed to grow that after acquiring, and now the new acquired businesses, where do you see higher potential of growing this business into scale? Will it be the FMCG part? Will it be the non-FMCG part? And where do you see greater contribution to revenue coming in down the line, maybe next 3 to 5 years?
No, so very happy for this question. One of the things that we stated 2 years back that as part of our strategy, we wanted, the split of revenues between the FMCG and the edible oil business of 50-50. Last year, it was when the company acquired the Ruchi Soya business, it was less than 5%. Last year, which we touched 30% of the FMCG share in the overall company revenues. The acquisition of this business takes us to 36% if the edible oils were to be flat. And if we continue growing the business of FMCG at 15% plus, I'm reasonably confident that over the next 3 to 4 years, we'll be 50-50 split between the FMCG portfolio and the edible oil business portfolio. And this part should take us closer to, it is a simple math that really between 3 and 4 years' time, we should be 20,000 crores of the FMCG portfolio. And likewise, we will have pretty close to the edible oil portfolio as well. So that should pretty much set us up in terms of both the revenue split that we have and the profit margin enhancement as well.
Right. Mr. Asthana, let's focus on the broader FMCG sector in India. We've seen pain across the board ever since COVID hit, ever since demonetization came in. This sector has not been in the best of health, and it's been buffeted by stagnant sales, lower profit margins, and of course lots of issues in distribution as well. When you look at from a 3 to 5 year point of time as far as FMCG is concerned, where do you see growth?
So you're spot on because post COVID there was stress, there was a commodity inflation which took the prices up. The companies were under stress to maintain the top line, and they did all kinds of innovations and sort of work towards keeping the price point intact for the consumers. But now what has happened is that the growth momentum in the economy, the overall rise in consumption that we're witnessing. So, for example, the last quarter we saw a recovery in the rural markets, and I'm seeing a pretty significant expansion that we're witnessing on the rural market. So the demand should start to pick up. Likewise, in the urban areas, the demand which was rising earlier sort of tended to taper off. But broadly, if we look at the FMCG segment, the companies have a responsibility to not only just keep the price points, pretty much which are affordable, but also come out with products, which are innovative, which are creative, which are health oriented, which are, the basic tenets of how the consumers are being serviced. I think that companies need to follow and work around, the environment which is there. We are hoping alongside as well that the government will look at more benignly in terms of the GST rates that we have, in terms of support, to the overall manufacturing on the food processing side. So there are a lot of areas in which, as stakeholders, the government and the industry, and the farmers, I would add, to support the industry to sort of reach its rightful place, but also be able to provide affordability and be able to provide value to the consumers. So I'm generally very positive towards the FMCG segment. I think India as an economy on the move and the growth rates that we're witnessing is very positive for the FMCG sector overall.
Okay. So, since you were talking about the kind of growth that you are confident of achieving in the non-food business from here on, which you have just acquired, I wanted to just get a sense of the rough market share of these categories: home, personal care, dental care, skin care. If you could just share with us, and where exactly would you be leading this to going forward, sir?
So toothpaste category that in the dental care, we clearly have a very strong leadership. So there are multiple different ways one can look at these categories, but in the particular category of herbal sort of dental care market, Patanjali Kanti would have market share upwards of 65%. And we're very confident about, growing that further and consolidating. In the other categories, these are very vast categories. So in terms of the market share, it perhaps, it is difficult to estimate right now. But the stated intent in several categories, for example, in the home and personal care category, a lot of our growth rates are high. Skincare, we are doing exceedingly well. But in the overall market size of what is available and because of the categorization, it would be difficult to give a precise market share number. But I would suffice to say that if you look at categorize them and do a bit of fine tuning, we are pretty would be very high in the respective categories.
Okay. Mr. Asthana, can you please throw some light on the competitive spirit within the industry, apart from listed players, which fight tooth to nail, even for a decimal percentage point market share in all the categories. Now you are facing a barrage of competition from unlisted players. People who sell on Instagram, people who have businesses on Facebook. Things like pure ghee, things like hair oil, things like masalas. These are all undocumented numbers, yet they impact sales of listed players such as you, HLL, even Marico, even Dabur. How are you thinking of taking on this competition, which is invisible but is extremely severe?
No, great question. And first of all, they're not invisible. They're pretty visible. It's right out there in the marketplace and growing as well. But I think it's reflective of the good trends in the Indian market as well, that all the listed players cannot be taking it all. The unlisted players have their room, have their space. They have done a very good job in terms of creating new markets where none existed. They followed a very nimble approach in terms of very cost-effective ways of reaching the new channels, direct to consumers, through e-commerce, through in different ways how they're connecting. But we're pretty confident that the overall growth in the market is, high and very supportive of taking in multiple more players. So really, that competition in terms of scale and size today is minuscule. At some point of time, I'm sure some of these players are going to become larger. They're going to get more competitive. But we are well prepared. I can't speak for others, but Patanjali is well prepared to deal, with sort of both the traditional sort of competition that we have, as well as the new age entrants which are starting out now. And I feel this is a very healthy trend in the marketplace, because you cannot have a few players just dominating. So this is good, and we are pretty confident that we'll have our own space and they will have their own.
Okay. So also wanted to get this understanding, 1100 crores we've discussed with you, which you're going to be paying for this acquisition, but you're also paying a royalty license fee of about 3% odd. What would you be getting in return of this one?
So the license fee of 3% entails that we have right to use all the brands that are in the portfolio. We get to we write over all the patents, the trademarks, the other sort of intellectual property which Patanjali has for a period of 20 years, and thereafter negotiable, to be mutually agreed terms. We also have, this no change in the royalty that will be paid over next 2 decades. So it's very favorable, term that we've been able to negotiate. And I believe that with the efficiencies, which are going to be EBITDA accretive, what I mentioned earlier of about 200 basis points, the net impact of the part of the profit that you're willing to share would be just about 1%. So it will not be that large an issue. And at the same time, we're also going to expand the business way faster than what it has grown earlier. So we're pretty confident that while it's a fee, but not a major sort of diluter of profits or our overall growth in the business.
Right. Mr. Asthana, two major events are upon us. One, the national budget. And what are the expectations that the FMCG sector has from the government at the center? I'm sure you are really very happy given the renewed rural thrust that Modi 3.0 has shown over the last month or so. what would you expect this government to do in terms of improving rural stress, an area where you have a huge brand equity and a large market share?
So as I mentioned earlier during the course of this interview, our expectations are fairly straightforward. One is that we would like, that some bit of relook at the GST rates, which are supportive to making the products more affordable to the consumers. We would like much greater thrust on putting more money in the consumer's pocket. And third is that clearly, as you also mentioned, that I think the rural markets, which were under stress for nearly 2.5 years, we're seeing green shoots of recovery in last quarter, and we would like the thrust in the rural areas where more income, through whatever policy measures the government can take, I think would go a long way in supporting the growth of the FMCG industry, but also at the same time where rural areas are consumers of, large consumers now of FMCG products. To make it more affordable for them, and this can only happen when they get larger incomes. So we believe that this thrust, what the new government is going to push towards, is going to be very supportive towards the FMCG businesses.
Mr. Asthana, just for clarification for our large viewers, we do know that Patanjali Ayurved has been mired in controversy of misleading ads. Will there be any kind of negative impact on Patanjali Foods with the acquisition that is now underway?
So just to put that point to rest, that there's no controversy around the businesses that we're acquiring. There is that issue has already been of the past. I think all that issue sorted out. There is no impact on the sales. In fact, in last 2 quarters, we saw our sales booming. I'm talking on the Patanjali Food side, and so I believe on the HPC businesses as well. So really, very little impact. By way there's we have a strong loyal customer base. We have a strong new consumers who are getting added to our portfolio with the efforts that we've done through new brand ambassadors and others. So there's a lot of confidence that the company will continue to on its growth path. And all these controversies that you speak about were which they happened at a particular point of time. They're all over now.
Okay, got that. Well, thank you so much, Mr. Asthana, for being with us and sharing all these insights with all our viewers as well. All the very best for this deal to be done in the due course of time. And we will be touching base with you very soon once the results also come in, because the earnings will be starting just in about a week, 10 days from now. And that will be an interesting time to again get in touch with you. Thank you so much for being with us.
Thank you.
All right, viewers, we will wrap it up at that, and you heard it from Patanjali Foods top management what this acquisition would mean for the company, what are the plans for growth going forward from here, and whether this deal will be a bit accretive going forward from here or not. So all of those details are now with you. With that, Shell and I bid you goodbye for this special edition, but action will continue on Business Today television, and we will be back with you very soon.
Good afternoon, ladies and gentlemen. Welcome to this special episode of Market Guru, where we get you to meet the finest brains of the Lal Street who make a lot of wealth for their clients in bulls and bear markets. And our guest today is Mr. Rakesh Arora. He's the managing partner of Go India Advisors. He's a frequent visitor to our channel and helps